Welcome to readtheticker.com. Today we're going to talk about Richard Wyckoff, price and volume pressure by the bar, by the swing. This is a very important video for Wyckoff logic fans. Please take the time to review the video, never pick a top ever, before reviewing this video. I'm going to use a boxing analogy to explain what I mean. In professional boxing, you can win a fight in two ways: a knockout or via the professional boxing point system. In the point system, the judges, three judges, actually weigh up how much strength and power is behind a punch and how much damage is recorded on the opponent. If you're a boxer and you get a good connection with a good hit, you get a very strong or very good point. If you only hit them lightly or don't do any damage, and the other boxer is not suffering, well, you're unlikely to get a point. And over a period of rounds, it's the person who does the most damage or has the most connections actually wins the fight. Here, for example, is Muhammad Ali's point scoring against Chuvalo, I think it is. In round one, Muhammad Ali won 5-4. Second round he lost 4-5. Third round he won 5-4. And what I'm trying to show here is that, for example, looking at price action and volume down below in this chart here, each bar is literally a throw of a punch. Now, what we want to know in each bar is how much effectiveness does it have on the trend. Now, does the bar and the volume move the trend up effectively? Or does a down bar move the trend down effectively? So we want to know how much weight or power is behind each bar. Now, as you can see, in an uptrend, we want to see the up bars closing high with good volume behind it, showing that the trend is up. And any downswing in an uptrend, we want to see light volume or volume that does not do any damage on the downswing. So we want to see solid support on the upswings with volume and light support of the volume on downswings. So we get higher volume on upswings, lower volume on downswings. And so therefore, if there's a change in behavior, and this is critical, between buying and selling, here we have obviously a change in behavior is actually still buying. But if we get a change in behavior where the downswing starts getting higher volume on the downswing and lesser volume on the upswing, that means people are selling into the trend and using the higher prices to sell into. So we're trying to determine how effective each bar is in moving the trend. The custom indicator I want to show off how we sort of read and measure how effective price and volume pressure is on a trend is a RT OBV with these settings. And the half month references to a chart period. For example, most charts are daily, weekly, monthly. We just added in a half month. And just like when you look at a weekly indicator over a daily chart, we're looking at a half month indicator over a daily or weekly chart. Half month is basically half a month. First of the month to the 15th, and after the 15th, just to the end of the month. Let's go through some examples. Here we have Apple Inc. Weekly bars. The red are down bars and the blue is up bars. The RT OBV is a price and volume oscillator, or pressure measurer, and it's showing that the trend is pretty much solid all the way up to here. We had our first aggressive sell down about 650, but as you can see, the volume on the downswing was not aggressive enough to see red, as the buyers were still there. So the blue up bars were still winning the battle. Now, as this indicator is set at half month, you have to understand that that's really 2 weeks, and you have to give it time to form. So it might have been red in the first week, and the second week it would have gone to flat. But the story of this one here is that people who believed that this was the true sell down were misled, and the rally carry up here, and a true sell down really started here. Now, as you can imagine, there was 1, 2, 3, 4, 5, 6 bars here. The first 6 bars, 1, 2, 3, 4, 5, 6, about there, showed a very deep indentation into the RT OBV, which shows a lot of volume smashing down on the low of the close. So the pressure was solid. So that was indicating a change in behavior compared to this sell down. So those who are thinking that it was going to Apple was still going to go from, let's say, 550 all the way back up to 1,000 or 1,500, as they were saying at the time, you're pretty much mistaken. So it showed everything was pretty much healthy all the way up to 700, but the selling that happened after 700 was a cause for concern, because it indicated a very strong change in behavior. Now, the change in behavior did not swing back for the bulls, and here was probably the first bit of covering rally. And when the red starts to diminish in the indicator, we have we probably call that a strong short covering rally. Then a bit of a test, we get a double bottom. As you can see, we get more green as the blue bars with volume push the trend up. And as you can see here, we had some selling here, but as you can see, it was pretty much mild. If you notice over here, we do get a bit of a change in behavior, as the selling in volume is a little bit more severe. It does matter, because you can see between here and here we have a stepping motion, stepping up of a stairway of momentum, but the steps are broken here, and at the moment they're trying to heal in this area here, because the next step is a little bit higher. So we have to wait and see what happens. If we get some strong volume down, it may force the RT OBV down lower. So this is the way, going back to the analogy of boxing, we're trying to measure how effective each bar is up or down, and how much volume behind it, and how much punch it has in pushing the trend higher. Now, the flattening part is quite interesting. As you can see here, there probably would have this. Here's probably about there's probably a half month and another half month there. So it started to flatten off as selling came in, as the closes became a bit low. Even with the a few down bars, and this up bar probably kept it flat. Even though the price is going up in this flat period, you can sort of see there was actually selling into the height of this price action. For example, here was a period which was pretty even, bit of a punch up, didn't go anywhere, bit of a light sell down. Obviously the rally started after that. Let's have a look around a few other things. Market. Here we have SPY, S&P 500 ETF, around the 2007 top. This is interesting. The trend was pretty healthy between here and here. Yes, we did have quite an aggressive step motion down, but it was quickly recovered between there and there. So you can imagine equal step down, break the stepping pattern. Yes, there was high volume on the down, but these bars here repaired that action. It goes up, we get a flattening at the top, and these down bars here are most vicious on volume, as it actually forced the next step down quite hard. And this rally, this pump or this price action here was actually very weak. I think it was also around the beginning of January, so it was really, there was nothing in that light volume, and as you can sort of see, there was no power in the punch to force the indicator up. So a change in behavior happened around here. As you can see, it never really repaired itself all the way down to the lows. It attempted to get a change of behavior here, this rally here. As you can imagine, that's head and shoulders, the last attempt to break up past resistance. I think it's last point of supply. And obviously we had the 2008 crisis. And we really didn't get a change in behaviour until these weeks here, where we had 1, 2, 3, 5 weeks of solid blue bars with volume pushing up hard into the closes to the high of the range. So change in behaviour started here for the negative, and a change in behaviour started here for the positive. And we had little attempts along the way, but no cigar. Okay. Look at the SPY right now. Oops. Okay, we here. This is if I remember rightly, that was this date was the Japanese earthquake with tsunami. A bit of a sell down, bit of a recovery. Things starting to flatten out. People get a bit nervous. The real sell, all these red bars here with so it was actually a lot of low closes, quite high volume. A bit of a sideways action, but the RT OBV said, hang on a sec, this is pretty strong volume and it's closing on the lows. Yes, it is absorbed, but there was definitely a change of behaviour. People really unloaded their stock. We had a weak rally here. As you can see, it was there was no real volume on the upside. It didn't really cause a change in behaviour from the previous couple of weeks of selling, or 4 or 5 weeks of selling. And then we have the story that somehow the US is going to be downgraded and everything just accelerated down. So we had pretty much very nice momentum steps on the way down between that period. As you can see, the stepping process is just a step down in momentum. And we didn't get our first step up until this week here. These two bars here showed a big step up. And put a horizontal line in there. Oops. Here's our test. Shows a bit of a test back, and as you can sort of see, it was a step. We had 3 steps up, 1 step down, but really it was just a light step down, and then we had the acceleration into the trend up. And this little pullback here was pretty much light volume. There wasn't any pressure on the down bars. The down bars weren't really doing any damage. As I said before, a boxing analogy, we're looking for what bars are doing damage to the trend, or what bars are actually improving the trend. And the RTTOB is really an accumulation of all those bars over the period. However, we did see some bit of a change in behaviour in this period here. We get some pretty much strong selling between this period. Then we had a bit of a repair period, as you can sort of see here. A bullish step. Stepping down, up. Didn't really break out. Flattened out. No more charge down. And the stepping process came over here. Bit of a, pretty mild between here. There's no real damage done to the downtrend. None of the red bars are doing any damage. And we just still moving up with no real damage. So at the moment, I cannot say there is a change in behaviour from buying to selling. If we do suddenly get some very solid weeks down, we'll see a change in behaviour, and this indicator will show it up. So we're going to look at something else. For example, this is biotechnology. Now this has been one of the strongest ETFs out there. And as you can imagine, we just recently got 3 weeks of solid selling, very powerful step down. So some people are selling into the highs. You have to watch this to see how this indicator, if it plateaus, it just starts going sideways with no more penetration, we might have seen the selling might have surpassed. But if the selling gets a bit more aggressive, another step down could be possible. But as you can sort of see, we had a bit of a change in behaviour here. Repaired, solid price action up there. All these red bars just weren't strong enough to make a change in the trend. Bit of selling down here. And once again, a bullish setup, and as you can imagine, a rip-roaring trend up here. For example, here's a prime example of we had 5 red bars. but really they did no damage to the trend. So in the boxing analogy terms, there was no punishment made on the opponent. They weren't strong enough to cause any damage, so therefore the trend was very much intact. Same with these other red bars here. Okay, another powerful trend from First Internet Trust. This is like, I think this ETF includes Google and LinkedIn. And here we have, from this period here, absolutely no change in behavior. All these little red bars, all these weeks down, don't indicate any damage to the trend. None whatsoever. Yes, we have a bit of a step down, but nothing to sort of say the trend's over. We do get a change in behavior here, some selling, flattened out. Oops, side there. So here we had a bit of a sell down, a bit of a change in behavior, started to go sideways. The stepping sort of ended and flattened out, and our first step up was here with those two red bars, which I think was coincided with the S&P. So what we want to see, as I said before, we want to see when the red bars on the down have a change in behavior that show that they are doing damage to an uptrend, and we want to have it highlighted to remove those red bars that are not doing damage to the trend. Obviously, you can flip this over to look at a bearish trend turning positive. Works exactly the same way. So it sort of gives an idea of price action, power of the pressure of volume, and whether any bars or period of bars in the swinging motion is doing damage to a trend that is material that you should be taking note of. Thanks for watching.